is going to be a Unit 5 assignment extra help session. Now, first thing I noticed when I started this assignment, there's a few things. The first thing is it says you had 3 attempts. And each time you put in a new attempt, you lost 5%. Alright, I changed that. You still have 3 attempts. If you try again, there's no penalty. And it also said that you only had 2 check your works. I'm going to change that to unlimited as well. Now, if I don't know how it works with Connect, it could be that you're still, if you've started beforehand, you may only get 2 check your works. So I would suggest when you get finished, try to do it. Start another one, and if you do, it should give you unlimited check your works. I don't want to tell you to submit what you got and start over. But that if it doesn't update you with unlimited check your works when you start again, then I'm pretty sure a second attempt will give you those unlimited check your works. Okay, I can't guarantee that, but I think that's the case. So excuse me. My intentions here, not to do all these for you, but do parts of these for you. Remember, the way this is set up is we should all have different numbers. Okay, so even though the concepts will be identical, or the methods will be identical, the numbers will be completely different. So make sure you're using your numbers in your questions and not mine when you try to replicate this. Okay. So anyway, let's start here with number 1, which is selling an asset. Okay, selling some machinery. Okay. It says Diaz Company owns a machine that costs $125,600, and the accumulated depreciation is $90,400. Now we got 4 different situations when we sell it, and each entry will be a little different. I'm going to do 1 and 4, okay, real quick, and then you will be able to do 2 and 3. You're on your own. Okay, there was something similar to this in the homework, so you can refer to that as well. So what I did was I went ahead and got this set up in Excel more or less. I've got these T's here: cash, machinery, accumulated depreciation, okay, gain on the sale of assets. This is a revenue account. Gain on the sale of assets. Essentially, it's a revenue, so it's a credit balance. Then down here, a loss on a sale, which is essentially similar to an expense account. So we'd have a debit balance. Okay, here's my numbers too. So here's the cost of that machine is $125,600. Here's the accumulated depreciation of $90,400. So if I do some quick math, which is to find the difference is the book value. What book value means means that according to our books, we have $35,200 of undepreciated value left. Now that's kind of confusing the way I said it. Essentially, our books say this machine is worth $35,200. That might not be the case. It might not be worth nothing, which is the case in the first one. Or it could be it's worth $50,000. And if that's the case, if we sell it for $50,000, then obviously we're going to make about a $15,000 gain, right? Because we're going to sell it for way more than it's worth. So that would be a gain. So from here, though, the cost of this machine will be in this machinery account. Okay, so this would be like a beginning balance. Okay, so in the machinery account, this number will be there. Okay, and remember the accumulated depreciation, which is a contra asset, the opposite of machinery. That's where this will be. All right, so that's where we would be starting. And if we're going to remove this machine via selling it, then whenever we do the entries, okay, I have to put a number here to get rid of this number, obviously. And I have to do the same thing here. So in all 4 of these entries, you're going to have this entry, which will be a credit to machinery of 125,600, so you can zero it out. And then down here, you'll have to remove this accumulated depreciation through a debit of $90,400. So all four entries, when we do this, will require a debit to accumulated depreciation machinery and a credit to machinery in the amount in your problem. Okay? Now, the other three accounts may be hit or might be used, and they might not be. Okay, so that's where you got to use this thing, the head, the brain, right? All right. So let's look at the first situation. The machine needed extensive repairs and is not worth repairing. Instead of trying to sell it, essentially, we're just gonna throw it in the trash. Okay, take it to the landfill and push it off the truck. Okay. So what they're saying is, it has no value. We're gonna sell it for $0. Okay. So if I come back here and look, okay, if you want to try to calculate a gain or loss, you'll take the book value. Actually, we're going to do the cash in. Okay, I don't have that much room there. That's why I'm using the word cash in. It's really the cash received. Let's put cash received. Okay. And then we'll have to figure out, and then we'll subtract from it. So minus book value. It's going to give me, okay, I got to change this real quick. The minus sign thinks it's starting a formula. So if I make it text, then it'll work. Okay. This is kind of the same thing. This should be minus AD, but I'm not going to, well, we can do it real quick. Format cells, text. Let's put that minus sign in here. Yeah, that looks a little bit better. And this will be gain loss. Okay, if it's positive, it's a gain. If it's negative, it's a loss. So in this first situation, okay, where we're going to throw it away, we're going to receive 0 in cash, okay, because we're not going to sell it. Okay, the book value is still $35,200, which is, I can just do a little equals with this, right? Okay. Why is it negative? So that's interesting. Did I put minus in there? I mean, it can be. Let's put the negative back in there. I kind of like that, actually. Okay. And so now when you combine those two, essentially, because it's kind of as a negative, we'll do a plus instead of a negative. So because it's, you know what? Let me do this. Let's change these numbers to accounting. I want it to look good. Accounting, we'll do no dollar symbol, and we'll do no. So there. So now we see that it's in parentheses, which will indicate a loss, okay? So when we do this entry, it's going to be a loss of $35,200, okay? This will be needed, the one in yellow, and this, plus we'll need to put a loss of $35,200. So that's the entry. Let's go make it, okay? So accumulated depreciation on the machine will be at $90,400. Debit, okay? We have to also record that loss as a debit. Loss from disposal. It's not a sale, it's a disposal, right? $35,200. And then the last one will be taking the machinery off the book. The machine off the book. $125,600. Okay, so there's that. That's not bad, right? I'll go ahead and check it since I've fixed it to where you should be able to do unlimited check your work. You see it's correct, okay? Now let's jump to number 4, where we received a lot of cash. Okay, we received $41,800 cash. So let's go back to our spreadsheet. Okay, and I forgot the number already. $41,800. Okay, so the cash received now will be $41,800. And so now you see we have a gain of $6,600. Okay, so when we do this entry, we'll still need the machinery credit. We'll still need the debit to AD machinery. We will now need a debit to cash. We actually got some this time, right? Remember the gain, because it's a revenue type of situation. It's not quite revenue, but it's close. Because it's considered like a revenue item, it'll be a credit here of 6,600. So that's the entry for number 4. Okay, I'm not going to do 2 and 3 for you. You got to do some of it yourself, right? So real quick, I'll type it in. Here we go. Let's see, number 4, the cash coming in was 41,800. We still have to do the debit to accumulated depreciation on the machine, 90,400. Yeah. Got to get rid of the machine. Okay, that's the 125,600. And then last but not least, we got the gain on the sale, 6,600. Okay, and so obviously you would want to go ahead and check this math. You can check it out. You can check it out on one as well. You know, make sure that these two equal that. It looks like they're going to work, right? Based on if you eyeball that. Here you may need a calculator, but anyway, check my work. Okay, you can do 2 and 3. Beautiful. All right, number 2, units of production method's pretty simple. It's similar to straight line. The problem has to give you 4 things. It's got to give you the cost. It's got to give you the salvage value. It's got to give you the units that it can produce over the life of the machine, and it's got to give you the units produced for the year that they're trying to get the answer for. Okay, so we gotta have all 4 of those, and they're all here. Okay. So our denominator is cost minus salvage, right? So it looks like we're going to have to do that on our phone here, or our calculator. So we have a cost, 47,500, and we got a salvage value of 7,000. So I can do this in my head, right? So I'm just going to do 47,500 minus 7,000. That's going to be $40,500. Okay. I can do that in my head. Yay. Okay, my denominator is going to be the total units of production, which it says it right here. The machine's useful life is either 10 years if we're doing straight line, or it's going to be these units of production. So that's my denominator there. 405,000 units. Okay, 405,000. So my depreciation expense per unit is 10 cents. So now I need to know, well, how many did I produce in the second year? And it gives you that number right here. Okay, so the second year production is 34,500. I got to multiply that times 10% to get the expense. So I'll just call that's going to be $3,450, right? 3,450. You can do that math in my head too. So that one's done. I actually did the whole thing. That was bad. Should have done all that. Anyway, you're welcome. Okay. This one is straight line. Okay. I think that's easy enough for you to do it yourself. Down here, you may have a little bit of trouble. Remember the first year, essentially down here, it's going to be, here's my annual depreciation, which will be whatever number this is. And it'll be the same number for all 4 years. Okay. But when we get to the end of the year book value, it will be, how are we going to do that? Ooh, let's see. It'll be the cost minus year 1 for the first year. It'll be the cost, not the cost, we'll try it again. Cost minus salvage. Well, let's go ahead and do it. I'll just be nice. You're welcome. Okay, cost over the life in years, right? So it's 4-year life. Here's our cost, right? What's our cost here? All right, our cost is $269,000. We're going to subtract from that 32,000. So my 237,000 is my numerator. All right, so that's cost minus salvage, which is the 269 minus the 32. Okay, And so this number here is going to be the same every year. So my first, okay, so there's my depreciable base, which is cost minus salvage. And to figure out the book value after year one, I'll take that 237 and I'm going to subtract from it, okay? Subtract from it year one's depreciation of 59250, okay? So my end of the year one book value is 177750. At the end of year two, I'll subtract another 59,250. Okay, so at the end of year two, my book value is 118500. Okay, and so you can finish the last two. Uh-oh. What did I do wrong? Oh, I know I did wrong. Let's go ahead. Let me go back and do it. I don't use the cost minus salvage. Instead, I use cost. So I did start saying it right. I corrected myself. So you take the cost, 269, okay, and subtract from it the 59,250. Okay. So 209. It's too early in the morning, even though it's like almost lunchtime. Okay, so then at the end of year one, subtract it again. So 59250. So the second year will be 150500. There we go. Subtract it again. I'll just do the whole thing this time, so I can show you something at the end. Okay, 91250. Then one more time, 59,250. Okay, 32,000, right? Which should make sense because 32,000 is the salvage value. Okay, so when you do the math, it should end up being the salvage value. Now we're correct. Sorry about that. Made a mistake. It's pretty rare, right? I don't make very many, so I'm just teasing. Anyway, it happens. So this one is double declining balance. Okay. How are we going to figure that out, huh? So remember that number. Okay, then the number is $269,000. We subtract from it $32,000. And that's going to give us that $237. All of that will be depreciated over 4 years if we're going to use the straight line method. Okay? If we use the straight line method. But, okay, we're not. So this entire amount, 100% of it, okay, so 100% of that 237 will be divvied up over 4 years because this is a it's got a 4-year life. So that means 25% is the rate of straight line depreciation. Each year we will depreciate 1/4 because it's a 4-year life. Okay, with this double declining balance, we're going to double that 25% to 50%. So we're going to depreciate 50% of the value of this asset every year until it's done. All right. Our beginning book value is not cost minus salvage; it is just cost. So the 269 goes here. Okay, remember that rate. That rate is 50%. So 269 times 0.5, which is essentially half, will be $134,500. So the first year, our depreciation is half. Okay, So at the end of that year, we will have an entry. We'll debit depreciation expense for $134,500. We'll credit accumulated depreciation by $134,500. Okay. What's left of value will be the beginning year book value minus the annual depreciation. Actually, minus the accumulated depreciation. Okay, which will be 269 minus the 134,500, which will be 134,500. Okay, now, so year 2, that'll be our beginning book value. Okay, it's considered to be a 50% rate. So now we're going to multiply that times 0.5. So year 2's depreciation is $67,250. Okay, which we're going to add to accumulated depreciation of 134,500. So our new accumulated depreciation is $201,750, right? So our year-end book value is the cost of $269 minus the new book value of $201,750. $62,250. $67,250. We're going to bring that forward too. Okay? So $67,250. And we're going to multiply it times 0.5. $33,625. We're going to add that to our year, our new accumulated amount plus the 201,750. So now in accumulated we have 235,375. Okay. And our end of the year book value is the cost of $269 minus the accumulated of $235,375. $33,625. Now here we have an issue. Okay. Book value, in other words, this year-end book value can never go below $32,000. Okay. Obviously, if we're going to depreciate half of this $33,000, it's going to be like 17 some odd $1,000 or close to it. Okay. That's way too much. Okay. So this last year I have to make the depreciation the number that I want. Okay. So essentially what I'm going to do is I'm going to take this $33,625 and I'll subtract from it where I must end at $32,000. So all I can depreciate in that last year is $1,625. So my depreciation that last year is way less than it should look like. It's $1,625. When I add that to the previous accumulated depreciation of $235,375, okay, I came up with $237. Okay, so if I go back to the original problem, the $269, my original cost, subtract my accumulated of $237. Boom. Okay, year-end book value works. That's how you do it. $32,000. Doing way too much of this. I better be skimpy on this last two problems here. What we got here? Yeah. So make you guys just here by yourself. I'll do this part right here. Okay. We issued this note. What we got? We got cash, right? So if we have cash coming in, the amount of 60 grand. What else we got? Well, we got to pay it back. Okay, so we got. So we're gonna have a notes payable. Okay, so that's that entry there. That's all I'm gonna do. You guys can do the rest. Okay, figure out that. You can figure out maturity date by doing some date math in Excel. And how are you going to do the last entry? We did something similar to that in the homework. You can figure it out. All right. Return to the question. Let's go payroll real quick. Okay. You got 2 big entries to make. They are pretty big, actually. Okay. But let's look at payroll. Okay. And let's do this. Let's go back to Excel. I did this so if you follow the sheets I did, if you go back and look at chapter 11, I did most of this already. So this will be a little bit of a review. And I'm not going to give you all the answers here, but I will get you the numbers, okay, in terms of the percentages, okay? So, we got, I think it tells us gross pay, right? So gross pay, kind of where we start. Let's see the problem. It says, so we got a couple of salaries here. So these 2 combined will be our gross pay, right? Okay. Yeah, it doesn't say anything about divvying them up. Okay. So for me, yours numbers will be different. 26,760 plus 70, 840. Okay, $97,600 is what I'm getting. Where's that at? There you go, 97,600. Okay, so there's my gross pay. All right. Let's see, employee. Withholdings. And over here we'll do employer amount. We'll put amount due. How about that? Okay. So employee withholdings. All right. So remember, we've got our we'll do the numbers over here in column A. So we've got the first one will be what? Federal income tax. I'm going to do like this for withholding. For withheld, we'll do state income tax withheld. Okay, we'll do maybe medical insurance premiums. Not Medicare. Okay, I need to move this over a little bit. You know what, I'll just do this instead. Okay. We got FICA, Social Security. We got FICA, Medicare. Remember, if you go back and look at the chapter, the amount of Social Security, that percentage over here, we'll put it as 6.2%. And then the FICA for Medicare is 1.45%. All right, beautiful. Now, I think this one also has some union dues. In other words, the company's taking them out of the paycheck for you, and they'll give them to the union on your behalf. Let's see what we got. Yeah, so this one actually does not have a state income tax. Let's go ahead and get rid of that, as to not confuse anybody. We'll get rid of that one, okay? So this is what we got. Look what it says. We've got Social Security is 6.2. Medicare is 1.5. Okay, we know that. This is our federal income tax withholding right here. It'd be $13,060. So there's my $1,360. Okay. Okay. So this medical insurance deduction is not Medicare. Okay, that's separate up here at the 1.45%. So this is some other medical insurance withholdings where maybe you got a vision plan or a dental plan that's not covered by the employer. So that'll be the $1,440. Okay, we got some union dues, right? That was in here. $780 union dues. $780. Okay. Now this says something about it does say something here about unemployment taxes down here. We'll get that in a minute. This is important when you're this last sentence here is the purpose of that is for unemployment taxes. So don't get confused with that right now. Okay, because we're not doing that yet. Okay, and so we can calculate these bottom two by taking the gross pay and multiplying it by, in this case, 0.062, and then again, gross pay times 0.0145. Okay, so let's see what we can figure out on this chart. Tax rate. Yeah, it says 6.2, right? We know that the employer's got to pay half of it too, right? So let's see. I might get this wrong the first time, so let's see. FICA, right? So FICA, I put in 6.2. Wait, the earnings, 97. This is trying to confuse you. Okay, remember it's 5.4% for that one, and it is 0.06 for that one. Okay. Now this, it may want. Remember, with Social Security, the total amount is 12.4. Half is paid by employees. Half is paid by employer. So let me put the full 12.4 in and see real quick if that's what it wants. Okay, it does not. Now, somehow I messed that one up too. I got 0.06, so it was just 0.6. I just gotta do. I put it. I did it again. There we go. So it does want the half, the 6.2, and then the 1.45. Very good. Which should tie into this. It looks like it's going to. Okay, so there we go. I didn't want to mess that up. Look at that. Okay. So the entry that I'm started on my Excel spreadsheet, this is essentially the majority of that entry, okay? So what's our net pay? Let's see what net pay is. Okay, this is going to be this number minus the sum of our withholdings. Here we go. Okay, so whenever we make this entry, this is your debit right here, the salaries expense. That's your debit salary expense is your gross pay. These right here are all credits. They're all credits to specific payables. Okay, you can figure them out. You're smart enough. And then this here is either going to be a credit to cash, if it's talking about paying cash, or if it's talking about doing the accrual, then it's going to be a credit to salaries payable. Okay, so that'll help you answer the second tab. Okay. Now let's copy these two. Control C these. Control V. FUTA. Okay. 0.6%, and then SUTA 5.4%. Hold on, easy. What am I doing? I'll put it in parentheses so it looks uniform. All right, beautiful. So this is the employer extra tax. Okay, so the employer has to pay the unemployment taxes, which is federal and state right there, and they have to pay the other half of Social Security and Medicare. Okay, so again, these are all calculations based off of gross pay. So gross pay times 0.62%. What did I do? 0.62%. Okay. One more time, we got gross pay times 0.0145 Medicare. And you see, these two numbers agree with these two numbers because it's the same numbers, right? Here we got gross pay times 0.006. Okay, that looks good. And then SUTA is equals gross pay times 0.054. Okay, so these guys combined, let's see, employer payroll tax expense. Okay. To do the last tab, and I'm not going to go and type it in for you. I'm not going to be that nice, okay? This will be your debit to payroll tax expenses. And then these will all be credits. You'll have 4 credits to different payables, okay? So it'll be, the first one will be Social Security payable. Second one will be Medicare payable. The third one will be federal unemployment taxes payable. And then the fourth one will be state unemployment taxes payable. Boom, okay? That'll get you done. I've also, so that's it for that assignment. I also put up an exam for Unit 5. It is multiple choice, okay? There's no problems. It's just multiple choice. I think you get 2 attempts. You even get a check your work, so obviously there's like 5 answers, so your guessing goes from 20% down to 25% or whatever. But anyway, you get more than 1 attempt as well. So you get 2 attempts. I think you get to check your work. I'm not positive. But that's also due Monday, okay? We'll be having a final exam up as early as Saturday, probably Sunday though, and that'll be due on Wednesday at midnight, and that'll finish us up for the year. All right, guys, get all that work turned in. You got everything that you've done previously. Everything in the class that we've done is due Monday. Okay, anything that you missed can be done up until Monday. There will be no late work accepted after Monday for any assignment other than the exam, because it won't be due yet. All right, guys. Hope this was helpful. God bless you all, and I hope to see you guys all in the fall. Hopefully back to being a normal college experience, in the classroom, with our friends, in the dorms, at the cafeteria, at the football games, at the soccer games. I'm really ready to get back to normal. I hope you guys are too. God bless. See you soon.